Hello, everyone. Welcome to Market Action. I'm David Russell, VP of Market Intelligence here at TradeStation. I am going to be talking today about FANG earnings. So everyone is ready for them. And before I do that, I wanted to start off with some important information and disclosures. The following presentation is for educational purposes only. All symbols and trading ideas discussed by the instructors are for demonstrational purposes only and are not recommendations. This presentation is not an offer or solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone. Options and futures trading carries a high degree of risk and is not suitable for all traders. Please read the disclosure information handout or the electronic disclosure information available on the TradeStation website. Okay, thanks everyone. First, I wanted to start off by mentioning that we have some indicators for using TradeStation, and we have a workspace. Now, unfortunately, what happened was I was building this, and something went wrong with my PC. This is not because of TradeStation; it's because of my PC. But the file got corrupted. So I believe, have we shared? Let me just make sure I was trying to rebuild this workspace for everyone. I want to make sure that we've actually shared a link, which my colleague is going to be doing. But basically, if you go to the link that's been shared, it's a zip file. This is essentially what you're going to see. I'm going to bring this on here. You're going to see these webinar materials. There's 3 items here. This is the slides of everything I'm going to talk about. This is an ELD file. Now, ELD files, for some of you guys who are new, basically includes a bunch of TradeStation indicators. And the special workspace I'm using uses these special indicators. Most of them are pretty simple, but they're not necessarily pre-built in TradeStation. Some of you guys who've seen my webinars before have probably seen some of them, but there's a series of indicators. And then finally, this is the workspace. Now, unfortunately, this was a file that I believe there's something wrong with. I tried to do it on another computer. So I'm going to quickly rebuild some of the key things right in front of you. But the first thing we want to do is this file in the zip, this ELD file, the Easy Language Document file. This is good. So if you double click on it, it's going to do something like this. It's going to want to import, and it's going to mention all these indicators. So you want to go ahead and import those into your TradeStation platform. Now, I already have them, so I'm not going to do it. And let me quickly show you what I'm doing here. So we're talking about FANG. And before you go any further, I'm going to show you 2 things that where I publish on behalf of TradeStation for you clients. Basically, the Market Insights blog, it's at insights.tradestation.com. And we write about all things involving the market. Today, we are writing about semiconductors, which is kind of interesting. We have Texas Instruments reporting right now, and some more coming out later in the week. And then this article here has a lot of the same information I'm going to be discussing in the webinar. So, a lot of interesting things over here that I share with clients. And then also, I publish some of these ideas on TradingView. Now, TradeStation has a relationship with TradingView, which is an outside charting service, and you can link it to your TradeStation account, and then you can trade. And so some of the things that I do, you can trade without having to log into TradeStation. It has an API that interacts right there on the chart. Now, I help with putting up some ideas here, and I want to just mention, see, these are some of the different ideas that we've published recently. We were recently talking about silver, which is kind of interesting because I had a big breakout today. Also, I had something about Facebook, which is one of the FANG stocks, but this link is going to be shared as well. And we mentioned it from time to time over on Market Insights. So these are some of the things that we cover. So now the reason I mention this is because one of the things we've written about a lot on Market Insights, one of the articles I'd written recently, if you look at, like, you started typing in like Tesla. Here's an article. Tesla has competition in the electric car space. I wrote this in early June. And there are all these other companies like NIO and these other stocks that started really jumping recently. After I wrote this article, we started having things like Nikola, some of these other special purpose acquisition companies that I'm going to actually be mentioning actually in the webinar, which is the slides are included as well. If you actually look, it's under Tesla. There's a list of other companies that are related to it. So what's interesting is that, and the reason I mention this is, something is happening now in the market where a lot of companies are coming to life and they're popping up. That a company like Nikola 1 week it didn't exist, the next week it's extremely active. So one of the things that I've been doing is I've been using TradeStation's technology to scan for these kind of companies that are super active. And one of the things I love to look at is options. So we have a special indicator here, one of these indicators that you just imported using the ELD file. And this indicator will allow you to, okay. This indicator will allow you to see, how many options a stock trades a day. Now, this is highly useful because when stocks trade a lot of options, they usually have a tighter bid-ask spread, which makes it easier to trade options on them. So sometimes I just, if a stock doesn't trade, 50,000 contracts a day, I don't even want to look at it. Especially when we're looking at FANG stocks. So I just wanted to mention that some of the things we're really looking to do here are to hone in on those highly active stocks. But the thing is we all know some of them. We know about like a biotech like mRNA. I'm going to link this so these will work together. Now, this is my radar screen, but we don't know all of them. So basically what I have here is I have a list of, I'm going to go ahead and just replicate it right here. I'm going to show you first what I'm going to do. First, let's have radar screen. I'm going to take away all my indicators. And what you can do if you want to open a radar screen is you can right click on the desktop, go to new application, and then go to radar screen. Now remember, this is a partially market action and also an art of TradeStation. I want to show you guys how you can really harness the power of our platform. So basically, this is now going to be something I'm going to build off of. And I have this list right here that I'm going to copy, but basically I have some stocks here. I'm just going to tell you what they are. There are BABA, INO, which is a vaccine maker. We also have mRNA, which is another vaccine-related biotechnology stock. We have a stock called NEO, NKLA, Roku, Snap, and the Virgin Space Company. I actually cannot remember its exact name right now. So it's the one by Branson. So these companies have been extremely active, Virgin Galactic, and these are some of the ones that were included in the workspace. So I'm going to get back to this, but basically what I want to do very quickly before I turn to the big FANG stocks, or just show you guys very quickly how to set up this radar screen. I'm going to go and I'm going to I'm going to select all the stocks. Then I'm going to go to time frame. I'm going to go to daily. And then what I'm going to do, this is what I was going to share with you guys if it had not gotten corrupted. I'm now going to go and add studies. I'm going to add a study which you just imported, which is called 5-day. If you hit 5, it'll come up as 5D. And this allows you to see time changes over different time frames, percentage changes. So I'm going to add 5D, 10D, 21D. I'm also going to start typing MA, and that's going to bring up market cap. And then I'm going to add another custom one that I've created called distance from 52-week high, and then one other that I'm going to add, which is average options volume. Okay, and then I'm going to hit OK. Okay, now what we're going to do is we're going to actually add the FANG stocks that we care about. So let's go to my presentation now. In here, I have an earnings agenda. And I'm just going to go ahead and take the companies off this earning agenda, which includes Snap, Facebook, Twitter, eBay, PayPal, Tesla, Apple, Amazon, and did I miss anything else? Advanced Micro, PayPal. And again, I apologize for this. The problem is that, when we have people working remotely and things, sometimes, your computer, it doesn't always get updated as much as it should, and that's what happened in this case. And I had to, unfortunately, that's what happened with this. So these are basically the FANG stocks I'm going to be talking about. Wanted to show you this because what this allows us to do is this allows us to see some really interesting things. It allows us to rank the percentage change, which I think is interesting, something I am going to mention, which is that Facebook, really had lagged the other stocks recently in the FANG group, and I'm going to be talking about that. Because they had a very interesting chart pattern yesterday, this outside candle. And I'm going to be getting to that. But first, let's go back and kind of start now with the main things that are important for people looking at FANG. And it's an interesting concept. We look at FANG stocks, and we all know that the kind of it started with these high-profile companies, but it is a useful concept because it has widened so much. And when something widens and gets bigger, it kind of tells you that the original idea had some validity. And what's interesting about the market right now is that even with the economy shrinking double digits because of coronavirus, in some ways, obviously, as many people know, coronavirus actually has boosted the demand for a lot of these different kinds of technology companies and internet companies. And that's something that's really important, I think, to realize is that if you go back to like 2008, the housing crisis sank the consumer and one of the strongest parts of the economy, like financials. This time, coronavirus came along, and the stocks that it's hurting are the stocks that were not relevant, or I don't want to say not relevant, but they were not important. Hotels and airlines were not leading the breakout in the market. Retailers were not leading the breakout. So what's interesting is that the leaders have been helped in many ways by coronavirus, either directly or they've been helped by the fact that you have a low interest rate environment, and they are, they benefit from that sort of environment. And so now it's fairly clear that that FANG has widened. In fact, this should say Twilio here, TWLO, Fastly, Shopify, Zoom Video. We know these companies, but what's interesting is that this has widened now, and this is something that is worth recognizing as an overall theme. Another big thing that's happening is that there is a clear shift toward ESG investing, environmental, social, and governance. We saw inflows into these ESG funds double in Q2 versus a year before. Now it's only about 11 billion, but there's a clear interest in things like electric cars, solar energy, which we've written about at different times on Market Insights. Solar energy is not considered part of FANG, at least not yet, but there are some extremely fast-moving sort of companies in that industry, and we have written about it at different points in time. But what's also interesting, when you look at the big ESG funds, it's all the same kind of companies. It's Google, Microsoft, Amazon, Apple. It's your same thing as FANG. So what's interesting is if you look at your average ESG fund, it's less than 1% energy, So we're looking now at a new shift and a preference for certain kinds of companies. And this has nothing to do with coronavirus. This was a building trend, societal trend for years before coronavirus. And it just so happens to benefit that coronavirus helps these big technology stocks, ESG helps these big technology stocks, low interest rates favor these technology stocks, and when you have a weak economic environment, people don't want to own banks. They don't want to own retailers and industrial stocks, but they do want to own growth stocks that are growing regardless. So it's interesting when you look at the deep positives that exist within the FANG stocks. Then when you look at them on an individual company level, we see that most of them have significant secular room ahead of them. They have runway down the road. And we say secular, we mean something like they haven't fully penetrated or achieved where they're going to be market-wise. And I think it's it's important to realize that a company like Tesla, yes, it has a greater market cap than all these other automakers. But the thing to remember about a company like Tesla is that it has not yet reached anything of the market penetration of Ford or GM or anything like that. And the market is going to view that future. By the time Tesla accounts for 10% of the global market of automobiles, the stock probably won't be doing anything by then. The stock market looks toward the future, and it's seeing these market share gains, especially in China. When you look at something like Microsoft, it's not the hugest part of their business, but we are going to see the rollout of this xCloud video game system later in the year. That's another thing that is this whole other, green space of potential growth for a company like Microsoft. Apple has the entire narrative of multiple expansion, which we've written about a lot on Market Insights, and it also has 5G. And then you also have Facebook with its shops, this thing of getting into small business. All these things are positive. So I want to just actually, quote here Satya Nadella, CEO of Microsoft. He said back in April, he said, we've seen 2 years worth of digital transformation in 2 months. So the thing is that a lot of this stuff was already going to happen, but now we've just pushed it forward. But the question is it done yet? When you look at a lot of these companies, you look at the points like I've mentioned here, and the answer to that might be, no, it's not done yet. So this is what we have coming up. Snap actually reports right now. I don't know what they're doing. We can actually look over on TradeStation. Let's take a look at Snap and see what's happening with Snap. Snap had a good earnings report last time around. This time it looks like it's bad. The stock is down, around 23, 23, 30, right around there. It's not a huge drop. It was already negative on the day, so it's down less than 7% after hours. But Snap was the first one. Not exactly, a FANG stock, but it's also in that ballpark. Snap is a company that had done some stuff to upgrade their platform. They're starting to monetize their clients better. It's an interesting company. It's not that large, but it's definitely one that we want to be aware of from time to time. The other thing about Snap is that it is cheaper if you compare its market cap to its users. It's significantly cheaper than a Facebook or a Twitter. Then, tomorrow night we have the big ones. We have Tesla and Microsoft. Then we have Twitter on Thursday. It's the only company that reports in the pre-market. Next week we have Advanced Micro, eBay, which has been on fire. And then we have Facebook, PayPal, which has also been on fire, and Qualcomm. And then we have the really big three, which is Apple, Amazon, and Google, Alphabet, on Thursday, July 30th. So let's start off with Tesla. This is one that everyone loves. And I want to just, mention that, we have covered Tesla extensively on Market Insights. If you look at some of the articles we've done about it, we had written about it back when it was first bouncing at the 200-day moving average, when the market was first crashing. We have done a lot of articles about it at different points in time. And I want to just see if I can find some of these. But, if you just kind of scan through Market Insights, and if you go to an article, and if you go to the bottom of the page, like, for example, I'm going to just pull up an article here. Like, we had done this. Let's see if I can find something. Tesla retraces epic surge back on March 18th. This is one that we had done at the time when it was down here bouncing at the 200-day moving average. So we were highlighting this, way back as a stock we follow closely. If you go to the bottom of the article and you click on the ticker, that will bring up all the stories on Tesla. So, most of you guys probably know when we look at Tesla that this stock really started moving last October. And one of the big things with this has been margin is essentially what the narrative is. People think about Tesla as a growth stock, but there is also, the real story here is profitability. This is a company that had trouble getting all of its manufacturing working, and back here there was a gap up with his earnings report back in late October, and that was the real turn in Tesla. So, we've done like we do a master class, and the next one is actually going to be on Monday. But one of the key themes, we talk about in the master class is when we kind of teach clients both how to use the TradeStation platform, but also some of the basic ways of how to understand companies is there are certain essential drivers of company growth, and volume growth is one of them, but margin expansion is another. And it's very important to understand the way margins work, because when a company achieves certain economies of scale and they can produce something, efficiently, then you can see dramatic ramping up of profitability, and the share price will reflect that. And that's really what we're seeing in Tesla now. And then the thing is, it appears that once they fix these manufacturing issues, this stock has actually now it appears that they have some significant momentum, and on top of that, they have some interesting things happening over in China. So if we look at Tesla historically, back between March, I don't know if you guys even remember this, but I'm going to look at my TradeStation platform. I'm going to change it to a weekly chart, and I'm going to scan all the way back here. I'm going to hit my little magnifying glass and look back here. In 2013, this stock went from about $40, and in the space of about a year, more than a year, it went up over just about 240. So, this was a stock that made a really significant move in about a year and a half. So if you look at Tesla now, that was about a 550% move that it made, and now it's also up about 550% since October. That move lasted about a year. This move so far has been about 9 months. So, 10 months, I'm not saying Tesla's done going up. I'm just saying that it's interesting to look at that. There are certain stocks historically that they move all at once, and then they stop. Like if you actually look back at the history of Amgen, when it moved back in the 1990s, it had this amazing run, the biotech stock, and then it went up significant amounts, like, over 1,000% in a period of about a year and a half, and then it just stopped for like a decade. So when companies are explosive growth stocks, you will often see this. It will run and run very fast. It will price in many years of growth, and then it will stop. Tesla has done this before, and there's a chance it's going to do it again. I'm not saying it is, but there's a chance it's going to do it again. So really the key thing here, like I said, why it's moving is the production issue. This company now has managed to get its production in order. They're getting margin expansion and surprises in terms of becoming more profitable. The other thing that's huge is Chinese growth. Now I want to mention a few things here. There was actually some people in Chinese, some people in China, some Tesla enthusiasts who were flying their drones over the gigafactory that's being built in Shanghai, and what they believe is that there's a plant there right now. Tesla is selling its Model 3 sedan in China, and at some point later this calendar year, they're going to be rolling out potentially the compact SUV called the Model Y. So what's interesting is it appears that that factory, despite coronavirus, it's a plant. It's one building inside of this bigger complex. This plant seems to be moving along very well. And so there's been some articles about this. There's a Chinese YouTube channel called Wu Vision that apparently has been spying on Tesla and seeing evidence of this. It's kind of interesting if you Google around and look at it. There's a lot of people. It's interesting because Tesla now is almost the level of Apple, where there's multiple websites that just follow it, people really following it. And like I mentioned, Tesla is one of the most obvious ESG, environmental, social stocks out there. But there's more. You have the S&P 500. Tomorrow afternoon, Tesla's expected to report a profitable quarter. So after 4 consecutive quarters of positive GAAP earnings, you can join the S&P 500. Tesla is already bigger. I'm going to go back to my TradeStation platform now and show you some of the things that unfortunately got deleted from my before. You can go to Radar Screen, and to show you the size of Tesla, you can go and import, for example, the entire S&P 500, and you can then rank it. You click on this column for market cap. You go to data, by the way, you go to add symbol list S&P 500. And if you then click on it, you can see, you can rank on market cap, and it will show the biggest one. You have Apple, Microsoft. But if you look at Tesla here, this is the other list that I added before that. Tesla's like over 300 billion in market cap. So if you look, remember, there's 500 companies below here. I mean, Tesla's bigger than JP Morgan. So Tesla's in the top 10 or 11. Now, another little trick you can do, always use this with Radar Screen. You go to settings, you go to page, and then you want to go to reference rows, and it will add numbered rows. So you can quickly see, Apple, you can count, and this one, it's, it's at number 23 because there's space above it, but you can count, you can see that, Tesla would fit somewhere kind of right around the, the top 10. And Google's twice because it has 2 tickers. There's the 2 different tickers for Google. So if you look at Tesla here, we can just actually go down and we can add it to the bottom of the list, which I love to do. TSLA. It's not in the S&P, but we can pretend it is. We go back up our list, sort by market cap, and we can see Tesla here would basically be, right around number 12 in the S&P 500, above JP Morgan and right under Procter & Gamble. It's not there yet, but what happens is that if it joins the S&P 500, it could displace a bunch of other companies and force other companies like JP Morgan, in theory, to get sold, because it's going to absorb their, their market cap and the weighting. So this is another, there's some people saying it might not get added because it's such a huge company coming in. Normally a company's going to come in when it's like probably 50 or 60 billion. This one's going to come in at 300 billion. That's going to cause, disruption with the weightings. But still, the market has been looking for Tesla to have this membership established. And the question is if it gets announced, will people sell it? Will they sell the news? You buy the rumor, there's that saying, people buy the rumor and they sell the news. Stocks will run in expectation of something happening. We say it will discount the future. It will price in news before it happens. It always creates risk of basically getting sold afterward, of all the good news being priced in. And it's always something important, you know, we're going to get into this webinar much, but it's always something important when you're looking at a stock, is to really ask yourself, is the good news priced in yet? And right now with Tesla, you know, one of those potential positives is going to be index membership. The market seems to be pretty sure, pretty strong expectation that they are going to get added to the S&P 500. But when you look at it in different ways, you know, there's a thing called the PEG ratio, which is your price earnings growth ratio. According to Yahoo Finance, it's still under 1x, which is, for a growth stock, it still shows that this is a company that, you know, if you imagine how large it could be, it is not, you know, $300 billion when you consider the global auto market. That is not, you know, necessarily such a huge number. Now, I'm not making any argument any one way or another, but I do want to mention a few other things about Tesla. One of the things that they've been doing is that they have been cutting prices. And what this is interesting is, and this is something we've written about with Apple as well, one of the things Apple did was they rolled out this the SE version of the iPhone, cheaper iPhone. What did it do? It boosted demand for the iPhone. And now what seems like Tesla, their last, I think it was in the last quarter, they reduced the price of the Model 3. And even though they had a strong number of auto deliveries, what are they doing? By lowering the cost, they're going to widen the base of users. They're going to gain market share. At the same time, if they continue to improve their profitability, then you have a situation where they're going to sell more cars and they're going to make more money. You know, they're going to be more profitable. They can make up for the lower prices. Now, it might sound crazy, but this is exactly what Henry Ford did 100 years ago, more than 100 years ago. And that was what the Model T was. He lowered the price of the Model T. The more he made, it got cheaper. So it's just kind of interesting to compare those things. That actually reminds me, speaking of FANG, I do think it's important to realize, when we look back, you know, 100 years ago was the beginning of this great run in the stock market. And that was based on a new kind of company, the industrial companies. Before that, the market had followed railroad stocks, shipping stocks, utility stocks, telegram companies. In 1920s, you get industrial companies like General Motors, International Business Machines, and a bunch of others, General Electric. And so if you look now, we're in a new era and we have these new stocks that are doing this. So it's interesting that, you know, I was on a webinar last week, clients were asking me, what do you think of small caps struggling and these other industrial companies just struggling, traditional retailers? And the thing is they're just not massively relevant. And if you look now, what happened in the 1920s, there was a new kind of company joining the market that was flourishing. And it's something similar today. I think it's important to realize that we are truly, I mean, people have been saying it's a new economy for a long time. You know, the internet started in the 90s in a big scale, but, you know, the market was still led by like ExxonMobil and Goldman Sachs and JP Morgan. And that's not true anymore. The market is finally starting to really recognize the transformation that's happened. So I think it's important to realize that this is a new kind of market. And, you know, let's not, you know, let's remember that, because this keeps widening. And what's interesting is as a market, you know, when a market is strong, you see this wideness. And this is something I wanted to mention also with Tesla, with it reporting earnings tomorrow afternoon, is it's important to realize at this point in time that Tesla is by no means alone. Now, this list is not intended to be complete, but basically, you have several other companies. You have this Chinese company called NIO. You have an American company called Plug Power, which actually makes fuel cells for forklifts. But it's a very interesting company because these fuel cells are literally, you know, if you go to an Amazon warehouse, they literally have like a fuel pump where people go and take the forklift and fill it up with hydrogen, and then it takes the hydrogen and turns it into electricity. It's very interesting and futuristic. It actually is technology going back to the space program when they use, you know, hydrogen to generate electricity. And Amazon's an investor in Plug Power. It's not really what you'd call cars right now. I mean, it's literally forklifts and other equipment like that. I have not been able to figure out yet if they're ever going to use these fuel cells in something like Tesla cars or other cars, but it is part of the same theme. And again, it's part of the ESG theme as well. Just think about it. We have energy and gasoline now, you know, relatively cheap, big sell-off in oil prices, and people keep buying electric car stocks. That should tell you something. It's very interesting, and it's showing that there's a clear demand. If you went back 15 years ago, people were buying solar energy stocks, but that's when oil was $90 a barrel. Now they're buying solar energy stocks and electric car stocks when oil is half that price and there's no shortage of it. It shows that there's a real shift, and I think we all know this, but as that happens, this trend can widen, and some of these other companies could very well start coming under this. And I think we need to recognize that this list is not complete. The webinar I'm going to do next month, and it's going to be on August, same time after the closing bell on August 18th. I'm going to show you guys how to find these different kinds of companies. I'm going to basically show you how I found some of the stocks that I was intending to include. So in this radar screen, I had a whole list of these companies that were not in the indexes, but were trading a lot. And, NEO is on the list. So I wanted to just, this is one that we had been writing about, a while back when it started getting interesting. This is a weekly chart. Let me go to a daily chart. But this one has made a dramatic move. Anyway, that was Tesla. Those are the main things like with Tesla. I'm going to go on to Microsoft, which also reports tomorrow afternoon. And Microsoft is a far more stable kind of, slow and steady stock. What's interesting with a company like Microsoft is that there's been some analyst reports recently that have seen that there's been some really strong channel checks, and they're seeing the potential for margin expansion. And with a company like this, you're looking at this principle of operating leverage. And I think it's important to realize now, if you're a company like Microsoft or something, when you add on those incremental customers, it doesndon't cost you very much. So you're going to bring in significant revenue, and it's going to result in all that incremental revenue coming in is going to become almost, I don't know the exact numbers, but it's going to become, 80, 90% of that could go straight to the bottom line. So that means that more revenue that comes in, the bottom line gets bigger, faster, which means the margins expand. It's called operating leverage. And this is something that can be very significant. And, with Tesla as a manufacturing company, they're going to have a lot more cost because they physically have to buy metal and batteries and rubber tires and stuff. Company like Microsoft, the marginal cost of new business is not that significant. So you're looking at, the potential for people really noticing this sort of margin growth. There's been articles about the cloud computing platform Azure gaining market share. There's been a sense also that this Teams, which is kind of like Slack. I've never used Teams. Whenever I use my computer, it pops up and it wants me to use it. But this is something I think we've seen. This is something else as a sense of it gaining, some usage. It's interesting today. I actually saw an article that LinkedIn was laying off some people. Kind of ironic, but LinkedIn, because of the weak economy, there's been less hiring. Apparently, LinkedIn is maybe one part of Microsoft's business that's struggling, but that's not a huge thing when you consider the amount of cloud computing and everything else people are focused on that. But then down the road, we're expecting in September this xCloud video gaming, which I think is another sort of catalyst that's down the road for a company like Microsoft. So this is a company right now that it's not usually considered a FANG stock. It can be very good for trading options, but it's not the most exciting stock. But at the same time, it's a company that we really need to watch and be aware of. When you look at a company like this, I've not traded options in Microsoft for a while, but this has been one that I have found is the kind of company that can be very conducive to catching some of these individual swings, like when it kind of pulls back and you have a sense of a trend and it pulls back. I like to look at, for example, at something like the 10-day moving average. It's similar to the 8-day moving average, but when you get some of these kind of short, tight pullbacks, you can use calls and generate some significant leverage from you can get from a stock bouncing around 195 up to 205. There's significant opportunity there. For people who are interested in playing those bounces. And I just mentioned, it's always interesting to look to use options. We have some significant tools for that. And if you actually go into this article that I wrote, there is a link to kind of a guide of some ways that you can trade options. Let me actually see here. If I go here to markets and I go to options, I have it here as well. Key option strategies to know for earnings season. So this I kind of highlight some things if you're new to options. I am going to mention some of these as we go on with the webinar. I'm also wanting to mention that what this does is this little indicator, average options volume, will let you see how many options companies trade a day. And if we rank it, we can see that Apple is the top. It trades over 800,000 a day, and then Tesla. And then Facebook and advanced micro devices, and then Amazon. So, this is a great indicator. It's like one line of easy language, which I'm going to be covering in the master class. If you go to, I can just show you what the easy language looks like, but it just basically, it looks at the past history of how many call volume plus put volume, and then averages out over a certain period of time, which defaults to 21 days. And then the cool thing about this one is you can set a threshold. So if it trades over a certain amount of volume, it will then highlight it in this teal color. So I set that to, it's 21 days of average history, and then if it trades more than 10,000 a day, it won't highlight it. So these are all active stocks. But if we go down the S&P 500, and then we start getting to other companies that are not as active, like Dr. Pepper or TJ Maxx, that only trades 8,000 a day. You can see that it's not highlighted. And this is useful because we can just say, I'm an options trader. I want stuff that trades a lot. I can just go and erase them. And now I don't even have to look at them. And then there you go. And now you can look at things in other ways. So this is just one of the ways you can use radar screens to your advantage. I have some questions. So before I go on, I'm going to turn to those. Okay. Okay, there was a question. TSLO. I wanted to apologize. That was an error. I apologize. This was in my Beyond. This should be Twilio. It was probably I just noticed that now myself. Twilio. I'm going to add that one over here to my other actives. Twilio is a cloud-based messaging stock. What else goes on this list? I have Roku on the list. Let me see if I had another. I was building off of a list I keep. I keep a list of companies that are active, and they come and they go off the list. Like Neo at one point, it was trading like 700,000 or 800,000 contracts a day. Now it's down to 300,000. I wouldn't be surprised if in another month or two, Neo's trading 100,000 contracts a day, and something else is trading more. But Twilio is this other one. Twilio used to trade a lot more options. This is a cloud computing stock that does messaging and stuff. It has had a monster short squeeze. It actually also has an example of a company that's had some operating leverage happening, had this big breakout, and this is just another one on the list that should also kind of be viewed as a kind of like, FANG Junior or FANG Plus. It can be a highly active stock. Okay. Yes, there will be a replay available. Okay. All right, let me see. All right, so the indicators, the questions now are, so we have something like the 5, the 10, the 5-day, 10-day. Now, this is useful. Someone was asking, how do you use this for any kind of short-term trading and swing trading? So I'm going to show you this now before I go on to my next stock, which I think is probably, it might be Apple. But what we can do, we can look at a list like this. And a perfect example to answer your question is, how do we know, how can we look for opportunities, for actual trading? Now, we use these 3 indicators. 5-day is going to tell you your return in the last 5 sessions, 10 sessions, and 21 sessions, which is roughly a calendar. It's not a calendar month. It's a month of roughly 21 trading days is about a month when you account for weekends. So if you look now, you can actually rank these and see like, wow, Tesla is actually up in that period, which you knew, a lot, it's up. But if you look at some of these others, a stock like, eBay, for example, this one, you can see that in the last week, it's kind of interesting. This actually, from my perspective, this is the sort of thing that is a potential way that you want to use some of these indicators, because you can actually see in the short term, this one has had a pullback. Another thing that's interesting to me is Facebook has gone nowhere for the last month. If you look, the NASDAQ is up like 9 or 10% in the last month. Facebook is up like 1%. But now, if we look at Facebook, it had a bullish outside candle yesterday. This is, to me, a very interesting one, and this was one over on TradingView that we had put up actually this morning as a potential idea, as a potential long idea. And today it was just kind of filling into that candle and sitting in that candle. But there's a lot of interesting things happening here in Facebook. Earnings for Facebook are next week on the 29th. So let's go now back to my PowerPoint. But that's an example of how you can use that. Because you're asking, I'm going to just show you one other thing. There's another indicator, and this one is going to be called MA test, which I did share with you. If you have the easy language, go to MA test. And what this does is this will show you when a stock has pulled back to a moving average, and it will also tell you if the moving average is rising or falling. So in this case, I'm going to change it to look for something that pulls back to, for example, the 20-day moving average. This is a 20-day. This is simple moving average, and it's going to calculate, and now it's going to find these companies. And once this is in radar screen, like for example, PayPal today touched below its rising 20-day, which is this line on my chart. I use this and I look at this every day, looking for companies that have had pullbacks. So if you look in the S&P 500, Netflix, for example, it qualified on that. From my perspective, a name like Netflix here, be interesting to kind of see what happens after all this shaking out. But I want to mention that this is some of the ways you can use these indicators, because this actually tells you when stocks have actually pulled back. And you look at a stock like Oracle here, I usually look at it with something like the 20 and the 30-day moving average. So Oracle, if you'd use the 30-day moving average, Oracle would have gotten flagged as a trading opportunity somewhere like around here. And in some of the other webinars I've done, I'm not going to get into it with this one, but in some of the other webinars I've done, I've shown you how to find other things involving other technical patterns and then cross-referencing it with pullbacks to moving averages. So you keep watching our webinars we do here for TradeStation. I will show you more of those over time. Now let's get back to our FANG stocks. Microsoft, Facebook, 29th. Key thing with this is there's a lot of negativity in this stock right now. They had this whole advertising, boycott, and the stock is just kind of sat after breaking out. And that's is something that could be potentially interesting if you look at the idea that's on TradingView about it. They have had the ability to keep their revenue strong despite a weak advertising environment. They've had increased usage, and they have this new Facebook Shops feature, which just started last week on Instagram, using a new feature called Facebook Pay. And right now it's the stock that has done the least in the entire group, but earnings is about a week away on July 29th. So the question is will Facebook just sit and do nothing until earnings? Maybe it will, but that's something to think about. Are people going to just sit? Or after that bullish outside candle the other day, is there something here where people might be more gravitating toward it? Now, if you were interested in something like that, you can go to, let's go to New Application. I'm going to go to Option Station Pro. I want to show you one of the other ways to be thinking about things involving options. Now, a lot of you guys probably know that options have time decay. The problem with options, or not problem, but one of the things about them is that as time goes on, they lose value. Now, the thing though is that they lose value after specific events. So when you have something like earnings, it will price in a lot of movement. And if we look here, this is Option Station Pro, you can see that it actually shows implied volatility. You'll notice that the implied volatility, that's the price of those options, essentially. It reflects the price you're paying for the optionality. For the fact that it is an option, you're not looking at, for example, what's wrong with this? I'm going to come back to this, it's probably loading. So the key thing is it's possible to look for a company that's going to move higher, and there's kind of two approaches. If you think a company like Facebook could move higher, you can, someone might want to consider doing something like buying out of the money calls and then, closing the position before the earnings report. The reason why is even if the stock jumps after earnings, the options might lose value. Well, it depends how much the stock goes up, but the thing is, the time value will go out of the options. But the thing is that it will tend to hold the time value because you have this unusual event of earnings. So you will not have your normal pace of time decay. So what that means is it can allow you to capture the leverage. The other potential is to look at something like a spread strategy. And that's something we get into in that article that I covered below. But I did want to mention here, look at the implied volatility. And what you can see here is you can see that the implied volatility for the Facebook options expiring next week is at 63%, and all the other ones are lower. So that's exactly what I'm talking about. The other approach that makes sense for people looking to leverage a company into earnings is a vertical call spread. Now, the thing about a vertical call spread, as you look at a company, like Facebook, is you're going to have time decay in those options after the event comes out. But by selling calls, so say, for example, a person wanted to leverage a move in Facebook. Say a person thinks it's going to jump to like a level like 270. So what you can do, and I'm not going to, at this point, I'm just going to show you all strikes. I'm not going to build the spread directly. But what's interesting is, I'm sorry, not 270. All right, so the stock's now, all right. Say you think it's going to jump to like 250. Now, a person, for example, could buy the calls. You essentially, a strategy would be to buy these calls for 1120 and to sell these for about 655. That's going to cost a little bit less than $5. If the stock goes to 250, say it just jumps to 255, and then it ends next week at that level. What's going to happen is you're going to instantly buy them at 240 and instantly sell them at 250, which means you're going to instantly collect $10. This is at expiration. So you're going to essentially, collect $10, but you're going to pay less than $5 to control that spread. So those are like the two very clear sort of strategies. Now, other people do things like they can buy straddles. There are other sorts of strategies for options. I'm mostly interested in people who are looking for directional plays. In the article, I get into things like how to hedge against a drop and some other things like that. But the thing that really stood out to me was after I prepared this webinar and I was looking at Facebook. At the end of the day, Facebook just remains such a dominant player. And when you look at a lot of its its apps and things like Instagram and Messenger and stuff, there's still potential for all of these to get monetized in different ways. And 4 or 5 months ago, I don't think most people were thinking about shops. But this is something that people see as, that has the potential to be a significant revenue driver. So this coming out now as well, I think is going to be something that's very interesting. And, the market cap on this stock, is under 700 billion, but after, Amazon, Tesla, and Microsoft, it is the next on the list. And it's only a question of, there's going to be a point in time where if we have some good numbers and they start to move away from this area, when stocks break out, I mean, this is really what people want to look for, in terms of momentum investing. And for these growth stocks, these are the sort of patterns we want to look at. And here is, breakout to new highs. It tries to break under and it comes right back and it holds. This to me there's some positive things that you can potentially see on this chart. Now, another thing I want to mention is there was a question about the indicators. This indicator is on my chart. It's not a radar screen, but this shows the implied volatility for all options on Facebook. And it also, shows at different points in time how volatility changes. Now, when the market crashed back here in March and April, volatility went up on everything. But what's interesting here is this is the last earnings report on Facebook. The stock gapped up on April 30th. Because the report was after the close on the 29th of April. What's interesting is you can see implied volatility fell after the event. And this is something that often happens. This is actually kind of muddied because the whole market had high volatility at the time. But this is what I'm talking about. The implied volatility is going to fall after the event. So one thing that can be difficult, and it's counterintuitive, but holding long calls through an event, you can be right and still lose money. I think it's an important thing to realize. So check out the the options primer that I have on Market Insights. Okay, someone is saying you're having trouble reading it. I'm going to expand it. And just so you know, when you're in radar screen, if you right click on it, or you can go to settings as well. You go to page, and then you go to font. And I'm just going to make it 12 font. And I'll make it bigger. It's not going to fit as easily. but we can still work with that. Now remember, I am using symbol linking. If you want to know how to do that, there's this little thing here, and you can change different colors. So I matched it up so that the green is on my radar screen and the green is on my chart. So whatever stock I click on will come up over here. All right, I'm going to continue now with Apple, which Apple reports in the post market on July 30th. And this is another one that's interesting because at the end of the day, the thing with Apple is this company is in the middle of a kind of transformation story. It is basically shifting from a consumer electronics stock to services and software. Now, the thing about that is it means that the multiples expand. And when you see, Apple only still trades at around 6 times revenue. Other companies like Microsoft, Facebook trade at 9 to 10 times revenue. So as Apple changes from one kind of company to another, people are going to give it higher multiples. This is something right now that in many ways makes even the earnings that are coming out not hugely important. This is now a company that has so many interesting things happening because as it just transforms itself, it can have this sort of continued multiple expansion. That's the narrative that's been happening with this. On top of that, we're going to have some kind of 5G phone. It's not clear if it's going to come out this year, but that is the other kind of big catalyst now for something like Apple. Then the other thing is, after that, we're going to have Amazon the same day in the post market. And this is a company where right now I haven't been able to, it's far enough out that I have not been able to really find a lot of particularly good insights on something like Amazon. In the article I wrote, Amazon was actually one that I highlighted something like the idea of using a call spread and something like this. And this is a sort of company where for people who are, bullish on a stock like Amazon, or when it stops rallying and it starts to roll over to the downside as well, vertical spreads in a name like Amazon can make a lot of sense. It's something where it really makes sense to kind of take a look at some of the options. It's an expensive company, and the stocks can be, obviously very expensive. And with options, it's possible to generate a lot of that same kind of return with much less capital at risk. Okay. Can I get a link to this webinar sent? I have to see if I'm going to, let me try. I'm going to copy down your email and put it over on another sheet. Let me do that. Someone wants me to send it to them, which I will do. Again, folks, I want to apologize. In this case, I did have my radar screen get corrupted, and that definitely held it back. Now, these are the main things right now. People are interested in things that have, trading potential. I'm going to just go ahead and, minimize my presentation for now and kind of go back to the kind of key things that interest me in terms of finding, kind of potential, for things like the trades and stuff. The tools that are immediately here are using things like the MA test and also looking for stocks that have underperformed, for example, in the last week or two. By just clicking on something like this 5-day, this will actually allow you to be able to find these companies that have had little pullbacks and things like that. And so that's the main thing I want to kind of highlight in terms of people looking to find trading ideas. The other thing is if you look over here on, well, and I will say that of the ones that that I've been covering here, the ones that seem to kind of potentially give the most, potential opportunity now off the bat is, could be Facebook. This is one that there's some interesting technical things on this chart, and with earnings 6 sessions away, this is one where when you look at that bullish candle, it's been consolidating in a tight range. This is something that people could look at the potential for this to expand higher. So someone looking to leverage something like Facebook, they could be looking to do something like buying something like, instead of doing the vertical spread, they could be looking to do something like buying these 250, like something that they calls up here. Because the thing about that is what that's going to allow you to do is it's going to have, when you look at this one, the amount of delta is what you want to look at. And so one contract is going to control the equivalent of 39 shares of Facebook. So it'd be $600 controlling, the equivalent of, 39 shares of Facebook, which is which would cost a lot more than $600. So the thing is if you're right and the stock moves higher and it starts to run, what's going to happen is the delta will increase because of the gamma, and the gamma tells you how much the delta increases. The delta tells you how much the option increases as the underlier moves up or down. If it has positive delta, like calls, then when the stock moves higher, the options gain value, and puts have negative delta for that reason. But the thing is for people looking to potentially leverage something, one of the ways to do that is with out-of-the-money calls before the event. But then the important thing to remember is that after the event, you're going to look and you're going to see this is a lot of extrinsic value. This is all implied volatility. So if the stock jumps, even up to like 253 or something, those calls are going to go to like $3, and they're all they're going to have after the event is going to be their intrinsic value. So for people looking to do things like this, the strategy is to not hold it through the event, and for people who want to be bullish is to hold to hold through the event. Then the strategy that can make more sense is a vertical spread, because in that case, your short contracts, you sell those, you collect premium, and then if the stock jumps, those contracts, or even if it doesn't jump, the contracts you sold will lose their time value. So you're capturing that time value by selling them, and you're offsetting that against long contracts that are deeper in the money, that are closer to the money. And that way you can actually kind of remove most of the time decay. Not all of it, because the ones that are farther out of the money have a little bit less time value. But the spread makes sense for people who want to hold things through. Now, again, none of these are ideas or specific recommendations, but it's important to understand the mechanics of how options behave around major binary events like earnings. Now, speaking of major events, I actually want to kind of end this webinar by mentioning, well, there were a few other things actually about, Apple. There were some things that are interesting. I do feel that I should mention about it. Right now, we had actually written about Apple on TradingView back here when it had this breakout from this triangle. When I look at a stock here like Apple at this point in time, there's obviously a lot of good news priced into this. So this is one, when I look at this, I don't see any kind of clear signals on it. But what's interesting is that Apple has recently doubled its footprint in Beijing with a new mega store. And also they're increasing their manufacturing in both India and China. So basically, they are going to be a global company, and they're going to be doing business locally in those giant Asian countries. So basically, Apple has not yet grown significantly in China, and maybe they will soon. So when you put these things together, something like this growth potential in Apple, then you also have Tesla's Gigafactory going up in Shanghai. There are some interesting things here for both of these companies involving China. Okay. Now, the other thing, when we look at the overall market right now, I wanted to mention two other things. First, we look at the S&P 500 today. I want to just quickly mention that it's important to realize that it's back to this gap from February 24th. It has essentially, there's an interesting pattern here. It's a little bit of like a cup and a handle pattern, but it essentially just has had a total shortage of sellers. There's so much negativity that there's just no one to sell stocks right now. And what's interesting is that you see right here that you have a low from February that has been resistance, and now we're fighting up, trying to get through those February lows, also trying to turn positive for the year. And this gap is something now that is just kind of looking there. It's not always clear that something fills a gap aggressively or not, but this was a big event back here. On February 24th. That was a Monday when everyone came in and coronavirus was hammering everything. So this is now that level that we're fighting with. I'm not going to make any clear predictions about it or anything else, but I want to just mention that's what's happening on the chart. Now, there is something else I think that's even more important, and quite honestly, I think this is more important to a certain extent than FANG. So I feel the need to share it with you guys before I leave. And what's happening is, let's go here to the ideas that we have on TradingView. The US dollar is entering potentially a significant period of downside. And we wrote about this on TradingView. And also, sir, if you're interested, there was one guy asking about like trading ideas. Follow us on TradingView, and there are ideas that get published from time to time. But again, for educational purposes only, but they do have, short and long tags on them. So this was back on July 6th. We identified significant issues with the dollar index. And since then, as you can see, it has followed the expected path. But what's interesting here, and I'm going to go back now just to trading view, is and this is actually my this is my chart on trading view, and I want to just show you the dollar index on a long-term sort of week, pattern. If you look at it on a monthly basis, the dollar index has been trending lower, for decades. We know this, but what's interesting is that this is now an interesting area because this was a level from 2017. If you might remember, after Trump got elected, there was this massive rally in the dollar. Small caps rallied, interest rates went up. Everyone was expecting 10% GDP or something. It lasted for a period of time, and then it fizzled out. And then since then, the dollar index, made a lower high, and it had this giant like spinning top. Now this is a monthly chart, but this is a major kind of like reversal here. And now, kind of as you might expect after something like that, or as the charts would suggest, this is now signaling some negativity. There have been three huge events, in my opinion, in the last 2 to 3 weeks that we need to be aware of. The European Central Bank did not increase their monetary stimulus last week. Chinese GDP beat expectations, and early at like 2 or 3 o'clock this morning, the European leaders came up with a bailout for Europe. Some kind of stimulus is like $800 billion. But what's very important, though, let's now just go to like the euro dollar, euro USD, and go to a daily chart. We can see now there's a lot of, this is kind of the opposite of the dollar index, but there's a lot of things here showing this is daily. So that monthly, this is that big monthly volatility. All these things here are kind of pointing in the direction of dollar weakness. And I think that's important to realize. FANG has been a clear trade. These NASDAQ names have been a clear trade, and there's obviously a lot of reasons why people look at these. But at the same time, we have to realize is that the metals are running. If you look at, so for example, on TradingView, we have written about silver multiple times. And silver today just exploded higher. Yesterday, we talked about how it was breaking resistance and it exploded higher. We were talking about it other times here where it had this, back here when it was just forming this triangle, and then it exploded higher. So silver is something which historically is very, inexpensive relative to gold, although that ratio is now turning back more toward normal. This is not something that people necessarily, want. I'm not saying that this is something that anyone would want to just mindlessly follow, but the thing is that we appear to be entering a period here of the Europeans getting their house in order, the Chinese getting their house in order, the Americans not getting their house in order. We have a Fed that's super dovish. And if you think about it, no matter what, the idea of the Fed raising rates soon, not likely. And then the Europeans have been kind of, it's interesting, they've been kind of getting their stuff together. In the ECB, you now have Christine Lagarde running it. These things might all sound just kind of boring and out there, but the thing is if we enter a period of sustained dollar weakness, it's going to create all kinds of trades, metals, energy, foreign stocks, and I think the one that we cannot forget about are your Chinese internet stocks like Alibaba and Baidu and a bunch of others that we've written about a lot on Market Insights. We have this other article, if you look, we go back to Market Insights. If you type in I'm trying to think of one of them. For example, one of them was, I think it was Alibaba. I think I mentioned it in the article, but I'm going to go here. Just one last one. You go to sectors and then you go to technology. I wrote this about a month ago. It has a picture of an anime on it on June 17th. There was a day about a month ago when 10 Chinese tech stocks all broke out at the same time. So this is also something now where you have the combination of technology, you have growth, and you also have the global trade. All these things coming together. So for people who like FANG stocks, I think it's important to realize that this webinar is about FANG Plus, and this area continues to expand. And so these are some of the things I think that they're interesting now as we look at this. There are still a lot of positives for these FANG stocks. Some of them have different things happening on the charts, as I mentioned. But then when we look beyond that, we see other things happening, especially what's happening globally. A lot of you guys might not remember the global boom we saw between 2003, 2008. but it was significant, and it's something that, you know, is worth kind of thinking about. And we are going to be covering it. We'll probably have a guide to trading the weak dollar on Market Insights in the next week or two as well, highlighting all the kind of symbols and the things to be looking for. So again, remember, none of these ideas are recommendations, or for educational purposes only. It's been great being with everyone. Don't forget to check out Market Insights. And also remember, we're going to have more webinars. We do a masterclass. The next one is on Monday. And then after that, we're going to be doing another webinar on August 18th that's going to help you guys find all these active stocks, those stocks like Nikola and Fastly and NEO. As they're getting active, we're going to show you the tools TradeStation has. There's going to be more focus on the TradeStation platform, showing you those kind of tools to find these stocks as they emerge. And the last thing I want to mention is if if this is correct about the dollar being weak, we're going to see potentially a lot of interesting global stocks start popping up, names you've never heard of, but names that could potentially be doing, interesting things. That might also be something that comes up. So it's great talking to everyone. And the last thing I want to mention is this indicator down here is implied volatility for all the options. In this case, Baidu. By the way, it's kind of an interesting thing with Baidu gapping higher and pulling back. Anyway, I hope everyone has a great day, and maybe I'll see some of you guys next week on Masterclass. Thank you very much.